So continuing in our living sector and really wanted to dive a little bit deeper with two experts, and maybe I'll take a chance to give a short introduction. Michael Acton is head of research at AEW, has been with the firm for 37 years.
33.
30, so in the industry 37, but I think with the firm 33 years, and works closely with all fund investment management, and a standing member of the Investment and Risk Management Committee. Great to have you here. Michael Connor, thank you for coming. Relatively short notice, so appreciate it that you're jumping in. Has been with Clarion, I think prior Gables, right?
Clarion Partners for 25 years.
For 25 years,
yes.
And managing as a portfolio manager the $6 billion US open-ended fund at Clarion. So
yes, that's correct.
Thank you guys for being here.
Yeah, we obviously have a problem committing. Right?
and we're unusual that we've been with our firms for so long, actually, in this environment, right?
Yeah.
Yeah.
So wanted to make this sort of a tri-party interview, and really pick your brains on the living sector, the development of the living sector. So maybe, Michael Acton, starting with you, having been in the industry for 30 years, can you highlight some of the key inflection points over that time period in the multifamily sector?
Yeah, sure. The inflection point is affordability in the U.S. housing. It has been my whole life. We don't have enough of it. We don't build it. Anybody who puts capital into the more affordable space usually does so to take those units out of being affordable, doing something to them, some sort of value add strategy. Go in, put capital in, raise the rents. We have euphemisms about turning over the tenant base. That means displacing a lot of people that probably can't find another affordable unit in the same neighborhood. So it's disruptive to tenants, it's disruptive to communities. You can make money doing it. I'm not saying it's wrong. We do it in some of our strategies, but affordability is the holy grail of housing. And if you talk to any city planner, any mayor, any place in the country, that'll be, if it's not their number one problem, it's number two. So that's what I would say.
One thing I would add to that, in coming from the industry from a different perspective, is to think about how the market has changed over the last 25 years. If we think back, say, 25 years ago, the typical renter was a renter that could not afford to purchase a home, or was a young renter that was coming out of the university and, again, fit that same profile. But over the last 25 years, there has been, and I'm sure Michael has seen it in his research as well, a very significant growth in a renter that chooses to actually rent rather than to purchase. And that has extended over time. It can be young professionals that choose to rent longer for some of the themes that Ziv highlighted. Could be